Nordic fixed income is often overlooked, but it's an interesting asset class involving 4 different currencies, but also the risks are different to other Western European fixed income assets. Richard Grottheim, hello.
Hello.
Thank you for joining us. You are former CEO of one of Sweden's biggest pension funds, AP7, and now you're advisor to Mandatum Asset Management, especially in the fixed income space. Mandatum Asset Management manages 20 billion primarily in Nordic fixed income strategy funds. When talking about a Nordic portfolio in this context, we mean Danish Krona, Swedish Krona, Norwegian Krona, and the euro in Finland. In a typical portfolio, would all of these countries have an equal weighting?
No, that would differ from time to time, depending on the sort of opportunities in all these countries and what kind of fund you have. In a high yield fund, it differs more, of course, but in a money market fund, it's more of an equal weighting.
Obviously, the 4 nations' economies have strong correlation. Are they pegged to each other in terms of currencies and then to the euro?
No, they're not. All the Nordics are in different situation when it comes to currencies. Finland is in the euro, so they have the euro. The Danish krona has since long back been pegged to the euro, so it's more or less 1-to-1 to the euro. On the other hand, both Sweden and Norway are free floating, and their currency has, during the last 3 years, been weaker against the euro quite a lot, but they are free floating against the euro.
What kind of yield can we expect from a basket such as this?
It also depends on what kind of products you talk about. When you look at the money market fund, it's of course low risk, but also a lower yield. You could probably expect something around 3 to 3.5% in that kind of product. If you move up to investment grade and then to high yield, it becomes better. A high yield product would probably yield around 6, maybe somewhat more, and an investment grade somewhere between 4 and 6.
Sweden was very early to start reducing interest rates in the summer before the Federal Reserve. And generally speaking, across the Nordic nations, where are the Nordic countries in terms of their interest rate cycle? And how far can they go?
Yes, as you just said, Sweden is in the forefront. They have been lowering rates for some time now, from over 4% down to 2.75. Norway as well. Denmark and Finland obviously are within the euro, so they have the euro rate, and Denmark are following the euro rate quite a bit. I think that the interest rate circle downwards is not ended yet. You will see more cuts both in Sweden and Norway, maybe from 0.5% to 1% more before we see the bottom.
Right, turning to bonds now, including high yield. In a Nordic context, what would be the typical components of a Nordic bond fund?
Also depends on what kind of product you talk about. If you look at a money market fund, it will be government papers, it will be short-term duration. If you move to investment grade, it would be more mortgage bonds, some company high-rated bonds. And then if you move up to high yield, it will be more risky, but also it will return better. And in that kind of portfolio, you have not rated company bonds mostly. When it comes to the mix in currencies, as I said before, that depends on the situation and the opportunities, which countries you have more in than others.
Which is the most interesting asset at the moment in that kind of mix?
I would say that a high yield product now, if you're yielding around 6%, that is quite a good return, I would say. And with a balanced risk, even if it's a high yield and not rated products or bonds in that product, it is also a balanced risk. So I would say a high yield product would be the most lucrative in this situation.
Is there one of those Nordic countries that provides that better than the others?
Yeah, I mean, Sweden is a country with a large number of international industry companies, and also in the space of IT companies. And I would say that these companies are quite attractive. There are also, of course, in Denmark and Finland, companies and bonds that you can put into that portfolio that is interesting.
Assuming the currencies are hedged into euro, How would the yields compare to a typical equivalent in Western Europe?
I think that the return in that product will be somewhat better than a European product likewise. How much better, I can't say really, but I would argue that the risk and return in the Nordic area is better than in Europe.
With stock markets at these levels, what do you think is a reasonable allocation to fixed income at the moment?
I mean, we can look at the situation generally in the world. The growth is slowing. You can see geopolitical crisis popping up all the time around the globe. And the stock market valuation is somewhat stretched in my mind, in some markets at least. So I would say that I would overweight a high yield product in this situation. So if you normally have a portfolio of 40% equities and 60% in fixed income, I would rather go to 30-70 in this situation.
Lastly, the killer question. I think this is the knockout punch as far as I'm concerned for Nordic fixed income. Global debt levels, and especially in the US and Europe, are prevalent, and they are a worry for many. What is the debt situation in Nordic countries? And to what extent would a Nordic portfolio be protected from a downward move in bond prices?
Very good question. Generally, all the Nordic countries has their government debt in order. Both Norway, Denmark, and Sweden are on the 30 plus range, and Finland as well.
You're
That
talking
means,
about as a percentage of GDP?
yeah, exactly. And if you
30%,
look at it,
which is half of Germany.
it's on half of Germany, and if you look at France and Italy, they are above 100% compared to GDP. So, of course, in a crisis, as you mentioned, where there is a focus on government debt and debt generally, I think the Nordic countries would survive better than nations in Europe, and also, of course, in the United States. So it's kind of a protector for these kind of hiccups that probably will come. I mean, you can see what's happening in France, for example, right now. So I think that was an argument to buy products in the fixed income in the Nordic area.
Lastly, in the event of a global downwards movement, is there any protection afforded by the Nordic countries' currencies?
Yes, as I said, both Norway and Sweden are free floating. So in a crisis, you would probably gain by their currencies moving in a crisis. It's also a protector as the debt level is as well.
Thank you, Richard. I think that's all we got time for. Thank you very much for joining us, and I enjoyed this interview. Speak to you soon.
I did also enjoy this very much. Thanks for an interesting discussion, Mark, and thanks a lot for having me.
Thank you. Bye-bye.